Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Global markets and policymakers are counting down to the Jackson Hole debut for Fed Chairman Kevin Warsh. Treasury yields remain elevated in the lead-up to his address over concerns about sticky inflation and fiscal deficits. We'll be live at Jackson Hole with former RBI Governor Raghuram Rajan, who now co-chairs the Fed's task force on balance sheet policies. Also ahead, fears of further flooding in the Nepal-China border region as rescuers search devastated villages for survivors of this week's disaster. More than 1,200 people are still missing. We'll assess the massive recovery task Nepal now faces with its finance minister, Swarnim Wagle, and one of the country's top business leaders, Chaudhary Group Chairman and President Binod Chaudhary. Our top story today, markets on edge ahead of Fed Chairman Kevin Warsh's first speech at Jackson Hole. Amid criticism of his communication style, investors are looking for clues on Warsh's commitment to price stability, with Fed officials divided on inflation and the need for a rate hike. Joining us from Jackson Hole is Raghuram Rajan, professor at the Chicago Booth School of Business, is also a member of the Fed's balance sheet task force and previously served as a governor at the Reserve Bank of India. Professor Rajan, always good to have you with us. We know that 3 Fed officials are already saying that inflation remains way too high right now. Is there a sense perhaps that Warsh may be underestimating how entrenched inflation has become?
I don't think he's underestimating it. After all, he's been on record saying it's been too high for too long. 5 years of above target inflation. So I do think he fully understands the need to get it under control. He fully understands the magnitude of the task that is needed, and certainly doesn't want inflation to be for another so many months above target.
So why is he waiting? We have the likes of Jeffrey Schmidt questioning whether, 3.5 or 3.75% policy is tight enough, whether it is effective in reining in inflation.
Well, clearly the labor market has been somewhat weaker recently. There is also some thought that when you look at the Fed's own measure of inflation, PCE core, it is somewhat above other measures of inflation, and that might be suggestive that the true underlying inflation may be a little softer. The problem, Haslinda, is really this, that what we have had over the last few quarters is not so much a steady shock which is pushing inflation higher, but a sequence of shocks. So we had, for example, the Liberation Day tariffs that were implemented. Of course, that shock is winding its way through. The tariffs have increased goods prices, but we don't have additional tariffs now, which are going to increase it even more, other than the kerfuffle with Canada. But similarly, we had oil prices go up. That had an effect on inflation. Now, oil prices, at least for the moment, have stabilized. Of course, the big concern there is whether the spreads for diesel, for aviation fuel, etc., will go even higher, especially if the Strait doesn't open up soon. But what I'm getting at here is we've had a sequence of shocks, each one of which has pushed up inflation, but then it seems to be coming back down, and then something else happens. I think that the monetary policy aficionados at this point would say, at some point you got to call it and say, sequence of shocks be damned, I will still raise interest rates. We'll hear from Kevin Warsh what he says tomorrow.
But the question really is, at what point do you call it? I mean, this is a Fed that is data dependent. So what data would actually prompt the Fed for Chairman Warsh to make that move? I mean, we talk about data dependence. There is a risk that perhaps it becomes a euphemism for perhaps policy paralysis.
Well, I would say, foremost on their minds must be one, labor market. The last labor reading was weak. There were some special factors which led it to be weak. The expectation was positive 70, 80,000. What we got was negative 20 and some. I think if you have a very strong labor market reading, that would be a force for tighter policy going forward. And of course, signs that inflation is spreading through. I mean, we're already seeing the price of technical equipment, of computers, of chips going up. But we also may see, as oil prices firm up, if the Strait doesn't get resolved soon, that too may be an inflationary force. So I think they're going to be watching both the labor market growth, of course, as well as inflation. That's not saying anything new, but it's saying that for now, it still is consistent with an approach which says, oh, maybe we have some time to wait. It may become such that they have no further room and they have to move.
Professor Rajan, you talked about how let's wait and see what Chairman Warsh has to say. This is a chairman who has said before that he wants to scale back communications. What are you expecting, really? How much clarity do you think he will provide?
Well, I think what a lot of people want to hear is that, one, he has the right instincts, which he has actually tried to make clear that he is very much against inflation and wants to bring it down. Second, that he has a plan to do it, that he knows what he has to do, and he can communicate that very clearly, that without entering into the sphere of forward guidance, basically, affirm that that he will take whatever measures are necessary to combat inflation. I think if the markets hear that there is a clear plan, hear that his intent is strong, that would calm some of the concerns that have emerged over the last few appearances that he's made.
Some people we have spoken to say that the Fed is behind the curve. If it doesn't move in September, do you expect the Fed to have to play catch up?
It might well have to. I mean, I would be more hawkish than where the Fed is right now. I certainly would have been averse to cutting rates last year, and I certainly would be at a higher level than now. I do think that financial conditions are not restrictive at this point. Yes, the mortgage market is not, mortgage rates are very high, and certainly housing is off the table. But when you look at growth coming from the very strong investment in data centers, etc., the fact that we have a very strong fiscal deficit, which doesn't look like it's coming down anytime soon, and the fact that consumers themselves are saving at a pretty impressive pace, and so they are continuing to spend. When you have all these things together, it would suggest an economy which is not being held back. And so I personally would think that the Fed should be raising rates or should have raised rates already.
How concerned are you when you take a look at the Treasury markets, the surging yields at the long end? Might Treasuries become a global systemic risk at some point?
Well, the answer is yes, of course, because it's the market that everybody watches. It's to some extent, the most important market in the world. But that said, I think we shouldn't be overly concerned about some movement in long rates. I think the world over, you're seeing this movement in long rates. And that's partly, of course, a worry about government deficits and so on. But it's also a function of the fact that governments are on the hook to spend more, whether it's military spending. In some cases, some governments are also subsidizing the price of energy. In some cases, if the price of energy goes much higher, they will come in a big way. So government finances, the prospective finances going forward, all those tend to weigh on rates. But also, I would say, given the kind of activity we have, there is a sense that real rates are lower than they would ultimately end at. That real rates will go up over time because there is so much need for investment going forward and so much more limited savings. And across the world, we're seeing a competition for savings. So that would suggest higher real rates and therefore higher long nominal rates also.
Professor, I want to take you back to 2005. Your Jackson Hole paper back then talked about, the issue of excessive risk taking. Do you see that happening at this stage in the global economy? And who's ignoring that risk right now?
Well, excessive is always with the benefit of hindsight, right? We look back and we say, yes, that was crazy. I mean, certainly there is a lot of worry starting to emerge about investment in AI, whether it's the massive investments by the data labs themselves in spending on frontier models. Are they going to be able to reap the benefits of all that spending, especially if less than frontier models are enough to do some of the work, and more firms sort of sign up to some of the cheaper models, many of which might be Chinese. So that's a big question. Who's going to make money and when? And when are the firms going to take it up, and who are they going to send their money to? There's also the AI infrastructure, the investment in compute. Arguments vary about how much of that is hardwired. That some people say that, if the demand for compute starts falling off a cliff, and so far it's not, it's huge. If it starts falling off a cliff, some of these data centers can be rolled back very quickly.
Right.
The real cost is at the fag end when you buy the equipment, the technical equipment, these chips and so on. So my sense is, if I were to look, I would certainly. But there are older risks that one has to worry about, right? Or the risks that are emerging in the non-bank financial system. That's more where I think you certainly would want to shine the light.
Professor Rajan, I'd like to pivot to India, given that you were the former governor of the RBI. The RBI recently spent billions of dollars trying to support the currency, but the currency remains pretty lackluster. Why do you think it has failed to do so?
I don't think so. The last time we did something of this sort was in 2013, and I was a governor then, and the currency had depreciated hugely over the span of a few months. So if I recollect, the nominal depreciation was something like 25%. This was during the taper tantrum. And there was also a substantial real depreciation of the currency over that time. So at a time like that, when the central bank comes in and says, we're going to take actions which bring in foreign exchange, that tends to have a lot of effect on the currency. There's a deep crisis of confidence. And we didn't just do the operation that the RBI has just done. We did a whole lot of other things, but when you put them all together, they build confidence back. I don't think the currency was that highly depreciated this time around. And I don't think there were a lot of other measures. Maybe they weren't needed, but there weren't a lot of other measures building confidence. And so in that sense, as a one-off measure, perhaps it has not been as successful. Now, that said, we don't know what the counterfactual is. Where would the exchange rate have been if it were not for this measure? And I'll suspend judgment on that.
Professor, if you were the RBI governor today, is there one move you could put in place to stabilize the currency?
Well, Haslinda, I at this point, I don't think the currency is that far out of whack. I mean, yes, there was some portfolio outflows, etc., which led to some depreciation of the currency. But I don't think it's a panic situation. I would rather focus on all the other things the Indian economy needs to up its rate of growth, some of which have been happening, more of which need to happen.
Professor Rajan, always a pleasure to have you on the show. Raghuram Rajan, professor at the University of Chicago Booth School of Business. Still a common insight. Nepal confronts one of its worst disasters in years. We speak with the chairman of Chaudhary Group next about the impact on communities and the challenge of rebuilding. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Officials in Nepal say more than 1,200 people are still missing after this week's devastating flash flood near the Chinese border. That figure includes hundreds of foreign visitors. More than 460 people are confirmed dead after a wall of water and debris rushed down a mountain valley, smashing buildings and bridges and burying villages. It is believed the disaster was triggered by the collapse of a glacier in the Himalayan region. Joining us exclusively, Nepal's only billionaire Binod Chaudhary, chairman and president at Chaudhary Group. It is Nepal's largest and most diversified conglomerate. Binod, our thoughts are with Nepal right now. Talk to us about the emergency efforts underway. Are there gaps that worry you the most?
Well, as you know that Nepal was not prepared at all for another after 2015 calamity of this scale. We believe that the numbers are yet coming in, and we believe that the numbers could pretty much run over 5,000 people. Number of villages have been washed away. Sadly, many of the tourists who were traveling to the Mansarovar and Kailash across the world have also been impacted. Many of the power stations, the bridges, and the local infrastructure is sadly very badly they've been damaged. We have been seeing a complete disruption in life, and I think it's a huge issue in front of us that how we are going to get not only the resettlement process, but also the process of getting the economy going.
What's your assessment of the scale of rebuilding efforts that will have to come?
I think it is still very early days, but we do believe that it will run into several hundred billion rupees. Probably, I won't be surprised if it runs into at least $5 billion to convert in the dollar term. I mean, it's not really also the money, the amount of time it takes, the effort it takes, given the terrain, the difficult geography. If you recall the 2015 rebuild effort, where our group was heavily involved in rebuilding the shelters, the schools, and all the other establishments, it took us 7-8 years. So what we have resorted to now is the immediate task is to provide relief materials to the people, open several camps in these villages, mainly in Rashua, Nuwakot, and Dading area. We're working very closely with the local administration, government, and the army, and then immediately get down to the job of starting the process of the resettlement by building the shelters for these people, schools for the children, and also getting the economy back on track.
Binod, you took part in the rebuilding of Nepal after the earthquake, contributing about $2.5 million. How are you looking at contributing to this rebuilding this time round? Have you been approached by the government?
Yes. We are working very closely with the government. We have been in touch with not only the Home Ministry and the Finance Ministry, but also with all our local partners who are active in that area. We have our establishments in the area which have been affected, the branches of our bank, the branches of our distribution system for the FMCG businesses. We've mobilized everyone. We are working very closely with the army, and hopefully we'll be putting together immediately in the next 2 days the shelters, immediate shelters needed for a bulk of the people who are displaced. And then we will start the process of, once again, the rebuilding exercise of building homes, as well as supporting, re-energizing the businesses, and also probably working on rebuilding of the schools. So I will not be able to give you a number right away, but the numbers will be probably far bigger this time than what we did in 2015. And we're trying to mobilize everything we can within our own groups, within our own foundations, as well as friends and foundations who believe in us and our work. And we have worked with them in the past, and we intend to work with them in future too.
Binod, you talked about how you'll be contributing more than the $2.5 million which you contributed after that earthquake. Might you double it? Might you triple it, given the magnitude of the devastation that we're seeing right now?
Well, I mean, it's not really the question of how much will it cost, because I don't think that's even important. I mean, I think I don't like to draw a line there. What is important is to make sure that this time, given the fragile demography, given the fragile topography, and how we build and what we build and how it'll last, how resilient it's going to be for situations like this. But as you know, that it is suspected there was an earthquake, there was a glacier meltdown, and the scale at which things happen, and within minutes, and it's at the Chinese border. I mean, it is difficult to imagine that the Chinese side probably would have been better sort of organized in terms of infrastructure, but even that couldn't stop the calamity and the scale of the damage. So it's a different issue here. I think it's an issue which also deals with the engineering, the way we build our infrastructure, the way we will build our dams and roads and the power stations. For more than 500 megawatts of power supplies have been disrupted, and I believe more than 30 power plants which have been operating have been stalled, not to talk about many of the power plants which are under construction.
Binod, thank you so much for your time under such terrible circumstances. Binod Chaudhary, Chairman and President at Chaudhary Group. Still to come on Insight. India's economy is facing a tougher external environment, from high U.S. yields to trade tensions and higher oil prices. We speak with World Bank Executive Director Nilkanth Mishra about what's at stake. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Taking a look at markets, of course, all eyes on Jackson Hole. Asian shares edging higher somewhat, while U.S. stock futures slipping. Traders holding back ahead of Fed Chair Kevin Warsh's Jackson Hole speech for clues on the path of interest rates. Taking a look where we are at this point in time, we have the MSCI Asia-Pac Index up by about 0.5%, driven by the Hang Seng as well as the Nikkei 225, which is up by about 0.8%. It's also about the bond market. Treasuries holding their losses, with a yield on the rate-sensitive two-year note holding at 4.23, as investors expected a hawkish tone from Warsh's speech. Flip the page Take a look at where we are in terms of how it is shaping up for the Indian market. This is, of course, the bond market for India. Asian bonds in particular have been tracking U.S. bonds. We're keeping an eye as well on the Indian rupee. We've had the RBI spending billions of dollars trying to support the currency, but it is still looking pretty lackluster. In my conversation just slightly earlier with former RBI Governor Raghuram Rajan, he says he is not too concerned about the level of the Indian rupee. Well, it is time for our weekly India focus. Let's cross over to Maneka Doshi, who joins us from Mumbai. Of course, India will be reporting a slew of its data. Maneka, we have, so far indications of a weakening economy. What are we expecting?
Well, I think you said it, as simply and as shortly as possible, Has. We do have indications of a weakening economy. None of this should come as a surprise because in the quarter gone by, the economy did have to deal with higher energy prices across the board, as a consequence to that, a weakening rupee, but also a very patchy monsoon in the initial period because of the El Niño effect. The two of these very big macro events, outside a slew of many others, would have pulled down growth, and the expectation is, at least the Bloomberg estimate suggests that growth will have slowed to 7.3% from 7.8% in the previous quarter. That said, it's still an economy that's doing a relatively decent job, Has, of weathering all these various storms. You have seen the government react, in ways to mitigate, for instance, the currency crisis and the many measures that the central bank has announced to be able to shore up dollar deposits, which has been a relative success right now. And it's exactly that money that they're using to help, well, I won't say defend the rupee because, central banks get very sensitive when, you accuse them of taking positions on the currency, but at least smoothing out the volatility. So, yes, it's been a tough quarter, but things aren't as bad as they could have been. I suppose that's the consolation prize.
Worth pointing now that even as we talk about a slowing economy, India remains the fastest growing major economy out there. So, it's still doing a fair bit in leading growth globally. The question is really whether it can attract back foreign investors. I mean, that's been key, right, Maneka?
Absolutely has. I think there are two ways to look at this. Yes, we're probably the fastest growing major economy in the world. But the question or the corollary to that is, are we growing fast enough to achieve even the medium-term targets this economy needs to, based on the size of its population, its employment challenges, the onset of AI, and the ability to raise income so that we go from a low to middle-income country. So I think that is the longer-term challenge. In the narrower term, I suppose, foreign investment is a big area. We just had the finance minister out last week pitching to investors across North America, asking them to come invest in India. We've spoken about what the RBI has done on at least the dollar deposit and loan side to help shore up defenses to the currency. You watched, and we've discussed this over the last several months, the efforts by India to strike multiple trade agreements with the UK, which has now come into force, but also with the EU, which hopefully will come into force next year. These are the two biggest. And then you've got Oman and a whole host of smaller ones, New Zealand, etc., and many others that are currently in the works. So, like I said, there are efforts ongoing to try and plug the many gaps. I think the big question, and this is what I discuss with economists whenever I meet them, is that do these seem like efforts that are band-aid, solutions, or can they come together to sort of create a more structural boost to the economy? And I don't think the answers are available as yet, especially because the external imbalances and the external pressures have been so volatile.
And speaking of the external environment, the Fed comes to mind. I mean, Jackson Hole is being watched for what the Fed might do. Expectations are that we could see the Fed raise rates in September. I mean, that might just put some pressure on the RBI to move as well, to defend, well, maybe not defend, if that's the word that we're trying to avoid, to support the currency.
Yeah, well, I think you spoke with, former RBI governor earlier today. Has, it would be great, if you could summarize what he said. But before you do that, I'll give you sort of a quick glimpse of the conversation here in India, and that is that at the time of the last monetary policy, the RBI came out sounding fairly dovish, and I think some people dialed back their expectations of a potential rate hike in the next policy meeting in October, to maybe towards the end of the month or early next calendar year. But the minutes of that meeting suggested that they were a lot more concerned about inflation than they let on. Now, I suppose, even for Monetary Policy Committee members, the data is volatile and it's difficult to take a very firm position. But yes, given the increase we're seeing in US yields, it will be very interesting to see how long the RBI can hold out from a potential interest rate hike, especially also from the currency point of view.
That's right. We have to keep watch of where crude prices are trading as well. Menaka, thank you so much for that. Bloomberg's Menaka Doshi out of Mumbai. Still to come on Inside, Nepal faces a massive rebuilding challenge after this week's deadly flood. We speak with Finance Minister Swarnim Wagle about the cost of recovery and how the government plans to pay for it. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Nepal faces a daunting reconstruction effort after a violent flash flood hit a Nepalese valley near the Chinese border. The flood swept away bridges, roads and communication links in the area. It's a huge hit for Nepal's $45 billion economy, already squeezed by higher fuel costs, weaker tourism and slowing growth. It's also a major test for Prime Minister Balendra Shah, who took office last year. His administration has been quick to mobilize the military for rescue operations, but experts say challenges remain. Joining us exclusively now is Swarnim Wagle, Nepali Finance Minister. Minister, good to have you with us. Our thoughts are with Nepal and its people. First off, let's talk about the rescue efforts. How is it going?
The terrain is a bit difficult. It's a rough terrain on the foothills of the Himalayas, and weather has not been very kind. However, given the Herculean effort of the Nepal Army, the armed police force, the civil servants, the Nepal police, and the overall leadership that is very much engaged as on the field, including ministers, and the Prime Minister himself was on the field yesterday. I think it is going as well as it could be under the circumstances.
Are there gaps in the rescue efforts that worry you a lot at this stage?
It's a very, very tough mountainous area. The gorge is very narrow. The air traffic is limited. So the rescue efforts can seem very halting. But my understanding is that from the second day onwards, it has been very smooth. People have been evacuated. And this is local residents, as well as tourists and pilgrims, as well as hundreds of hydropower workers. So it's a river basin that is home to at least a dozen major hydropower plants. And there are a lot of workers who needed to be rescued, including some permanent installations, the army, the police, and the customs department officials. I had 40 staff from the customs department under the Ministry of Finance right on the border. And 25 of them were rescued. Very sadly, 15 seem missing right now.
There are warnings of further floodings, dams bursting. How are you assessing the risk, and what mitigating factors or what mitigating measures can be put in place?
Well, as you know, with growing awareness about climate change, and there's been a lot of academic documentation of the threat posed by GLOFs, for example, the glacial lake outburst, floods, etc. The exact scientific origin of this is still being determined. Could be an avalanche, could have been triggered by an earthquake along the Nepal-China border. But this is a real and present threat and danger in an era of worsening climate disasters. And we need to do better. The transboundary information sharing, the alert systems, the early warning systems that need to be put in place. I think we need to do much better, both at the bilateral, regional, and global levels to save lives and property.
Minister, I was actually referring to serious floods that may happen in the coming days and weeks. I mean, we heard the warning from China in particular. Are other measures already put in place to ensure that you can cope with the situation?
Yes, we are aware of the likely consequences of a second outburst. And, right now, the river basin that might be potentially be affected is really uninhabitable. There's no one there. It's been an utter, it looks like a war zone, the kind of mud floods that has swamped the basin. So people have been airlifted or evacuated to a safer ground. But we are aware that this likely second flood, we'll put in place adequate measures to prevent the disaster.
The priority right now is to save lives, but I want to touch on the impact on the economy. Can you quantify the impact on Nepal's GDP for perhaps this year or the coming years? Can you quantify the effect of this disaster?
We're still working on an exact scientific, estimation of the loss and damage. We should have that in a week or so. But preliminary estimates are quite worrying. In addition to the terrible loss of lives, the local residents, tourists, pilgrims, hydro workers, private homes, thousands of private homes and land, agricultural land, commercial land, this 80-kilometer stretch of road leading up to the border with China, dozens of bridges, and from the private sector side, 700 megawatts of either running or installed hydropower capacity has taken a hit. And cumulatively, I think the losses and damages, when they will be finally quantified in a week or so, I think will amount to at least a few $1 billion.
Do you have the fiscal space to go through with the reconstruction efforts? Might you have to raise funds? Might you need to turn to the IMF or China for extra funding?
So we're looking at this disaster in 3 phases. The first one is obviously, our quest to save lives. So this is the phase of rescue and relief. The second phase, lasting a few weeks, will be about early recovery. So this is putting places in temporary shelter, provisioning of adequate food, water, electricity, telecom, and even possibly cash for work initiatives. And the third one, which is more long-lasting and durable, will be the actual reconstruction phase. Now, for the relief phase, we are well covered. We have provisioned enough money in our own national budget, which I announced at the end of May. And very encouragingly, we've received immense solidarity from our international development partners. The World Bank has committed to, siphon off at least 10% of its undisbursed allocation for other projects to these humanitarian needs. So that will amount to about $160 million. There's something called the Catastrophic Deferred Drawdown Option, CAT-DDO, from which we can allocate another $10 million. And then there's a whole series of grant announcements that have come from our friendly neighbors, as well as international partners. The Asian Development Bank has committed $5 million. India has already flown in a few cargo shipments of, material support in kind, blankets and tents and dead body
Right.
covers and dry food, etc. The Chinese government has placed cash support, and the United States, Great Britain, and many other entities, the International Federation of the Red Cross, etc. So there's a whole list of friendly countries and international agencies that have placed immediate support for the rescue phase and possibly the early recovery phase. But for the reconstruction phase, that will amount to rebuilding the roads and the bridges and the hydropower plants, we will need to start a different kind of a fundraising campaign.
How much do you think you might need? I ask because after the earthquake, you started a fund worth about $2.5 billion for reconstruction. Given the magnitude of this devastation, is there a sense perhaps you'll need much more than that, double, triple the amount?
So I did co-lead the effort, to quantify the damages and losses associated with the 2015 earthquake, the last major disaster that we had. The big difference, obviously, that was an earthquake that decimated, hundreds of thousands of houses, claimed 9,000 lives. This time, and that covered like 31 districts. This time, it's a flood that is much more concentrated on this particular river basin. So it's affected 3 districts and maybe 7 or 8 rural municipalities. So it's much more concentrated and narrowed down. But the impact has been much more fierce because the entire hydropower chain along this particular river basin has been hit. The roads and the bridges have been hit, in addition to the terrible loss of lives, etc. So my sense is it will run into the few billions, but it may not exceed the total damage and loss that we estimated for the 2015 earthquake, which was actually $8 billion, of which $4 billion was roughly public needs and another $4 billion was private needs.
Do you see Nepal tapping the IMF? Are you in conversations already with the IMF?
IMF is not known for assisting reconstruction efforts on a major scale, right? Their mandate is more on balance of payments and macroeconomic stability. Now, on that count, of course, we will be consulting with them on what the consequences of this crisis will be on our external stability, whether we need support on that regard. The agencies that are really good at helping us with major reconstruction efforts are obviously the 2 multilateral banks, the World Bank and the Asian Development Bank, and our bilateral partners, the immediate neighbors, India and China in particular, also stood out when it came to assisting us with the post-reconstruction efforts, post-disaster needs in the aftermath of the last calamity. And this is roughly the pattern that we think we will follow this time around as well. So the large multilateral development banks and our closest neighbors.
So, Minister, just to be sure, just to confirm that it is likely China will help in development efforts, is this through the Belt and Road Initiative, for instance?
No, we have established bilateral mechanism for channeling aid, and both the Indian government and the Chinese government have been assisting us for decades, and it will be through that mechanism that Nepal will be accepting support.
Minister, could you confirm if you'll be turning to India for energy supplies, given the need for it at this time? Are there negotiations and talks with India on it?
We have a long-term agreement and an understanding with India when it comes to power trade. So the government of India has committed to buying up to 10,000 megawatts of electricity that will be exported from Nepal over the next 10 years. But each agreement is contractual and is bound on a case-by-case basis. We've begun to export around 1,600 megawatts of electricity, in recent months. But this is also seasonal in nature, right? In the lean months when there is less rainfall, we produce less electricity. And in the monsoon months, we are able to export our surplus. So it's quite seasonal in nature, but on average, we're doing quite well when it comes to seeking a market for our surplus energy. But our goal is to electrify our mobility, our own consumption needs at the household level and at the industrial level. And any surplus, I think we'll be able to export to India. And that is going well. So that modality is in place, and that is going very well.
Not to be pointing fingers, but this is one of the deadliest disasters in Nepal's modern history. I'm just wondering, what is the single biggest failure that has led to this, Minister?
Well, this is a natural disaster. It was not man-made. What we could have done better and what we could do in the future is obviously monitor the risks posed by these glacial lakes spanning the massive Himalayas. When it comes to cross-border exchange of information, more scientific research, know-how, early warning systems, etc. But this was a pure natural calamity, and this goes with the territory. As beautiful as the Himalayas are, the perils are embedded therein as well. And we just need to do a better job at disaster preparedness, etc. Now, we could also do much better in terms of the zoning and the settlement permits that we allow for people to build homes, create little towns along quite vulnerable river basins. So that's something that we need to do much better in terms of disaster preparedness. But the origin of the crisis was, I think, quite beyond our control.
How big a challenge is this for the government under the leadership of a 36-year-old prime minister?
It is a challenge. We have limited resources, but we've done our best. The overall assessment of the early response undertaken by the government has been very, very positive. The prime minister himself has been posting updates on the lives saved, on the rescue missions undertaken, the immediate humanitarian needs that we've been able to address. This has been quite exemplary. And at a crisis like this, the whole country is united. This is not just the government's responsibility. This is what we call the whole of the state and even whole of the society approach. And all political parties, civil society, the private sector,
Minister?
Our international partners have come together, have rallied behind government efforts.
Right. Minister, we have to leave it there. Thank you so much for your time. Swarnim Wagle, Nepali Finance Minister. And that is it for Insight. Keep it here with us. This is Bloomberg.